All right, Sunday 17th, we have a whole bunch of tickers. I'll try to make it as fast as possible. But first, yeah, that was it, the battle of the base. So first, we have to address the market as a whole. So these are the tickers. I might add a few at the end. I'm not sure if we have time even to get through all of these. It's like 115 of them. The S&P, we've been saying that the bulls are in charge, the buyers in charge. Much worry for the last few weeks. Investor sentiment had flipped, and that was the only variable in play because the taper is no longer in play. We know about it, so it's somewhat priced in. So now they had a violent reaction the other way going into earnings, and that's an important thing to mention because for a while I've been looking at the small caps because they are the telltale sign that is going sideways for so long, whereas the S&P has been up and away when IWM has been chopping up in a very wide range for months and months and months. So my clue for what this guy is going to do and what the Qs are going to do is the breakout from the IWM for commitment. So if I'm long the S&P, I can stay long into the earnings. That's my quote trade, like the top line trade. So if somebody's shorting the earnings, they're going against the grain with regards to logic and the idea of these guys are going to disappoint. They're not. Like Google is not going to turn in a crappy report. In fact, I have a gut feeling that the Google report is going to be amazing, like even more amazing than the last few. So I would not be surprised to see Google break into a new all-time highs. So that's my quote guess on earnings. I say guess because we don't know. I know the report is going to be great. I don't know how people are going to react to it. I'm very confident that none of these big guys, even Facebook, is going to offer a crappy report. Short Tesla? Okay. Good one there. So no, don't short Tesla ever. So none of these FANG stocks are going to disappoint with regards to absolute numbers. They're going to be blowout numbers. So the concept is, what are people expecting? So here's the logic. If we've had a sentiment crisis of late, people flip backwards late. So now the price action jumped, and this is when they're probably going to follow it with sentiment because we're chasers by instinct. That's why everybody falls prey to the FOMO. You see people running, you chase them. So price action flipped, but sentiment is probably still sour because that's what they've been hearing on CNBC for weeks, I imagine. I don't know. You probably know the answer to that one. So we focused on the price action, and we were ready for the flip. In fact, we were waiting and looking at it. So hopefully we have the lead. We're in the lead pack, and the people are chasing behind. Anyway, it's a coin flip into the earnings week, but I think the upside potential is more likely than the downside risk. That's the overall picture. So the telltale sign, the IWM, I've been tracing a few values for us. 228 was one of them, and that's Friday. So yes, it was a green day. Wait, it closed red? Anyway, so reddish. But they broke above the 228, but usually the close is what matters. But here, they're still there, 228 and 230. Take those out, I think they can overwhelm these, which were the all-time highs. So look how far sideways they're going if I reset it for a weekly. And the drawing would be something like burst, chop, burst. So it's pretty important to realize that this is a possibility. So people sometimes get so consumed with the S&P and the QQQ, and they forget about a basket of 2,000 stocks. The reason I promoted it into being important, even though all of these stocks fit inside Apple as far as market cap, is because if I'm correct about this being a sentiment correction, the tizzy we just had, then these are important. They represent investor sentiment more than the rest. So anyway, those are my 2 cents. So if they take out these tops, I think these won't stand a chance. And if these are failed, then the upside potential is big just from the sheer fact of the bears will capitulate. They have nothing to shoot against. Like if something is rallying into a prior failure level, then the bear could say, if I sold short, I would say, you know what, my stop is if it's 234, I'm out. Well, once 234 is gone, I don't have a reference point. So I tend to capitulate based on X% loss. So that's my personal view. I'm not saying this is a guarantee. I'm saying I'm looking for them. Remember that? And look, higher lows. The closes are getting higher and stronger. So we could have a headline out of the blue that breaks sentiment again. And it needs to be strong enough to break all of these tails. So these tails are weekly rejections. So during the week, they fall here and say, nope, 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 nope. One time, they close down here. Another time, they close down here. And then it was all nope, nope, nope. All the green close are up here. So this is where they closed for so many times. And now they closed above them. So the bulls, it's a bullish posture to the chart. I don't know what people are worried about. It's a bullish posture. All right, so that's the big blurb. Christmas rally. It's already been a rally, so yeah, sure, why not? But it all starts with these guys. So Netflix is the first tech stock, and Tesla is here. So the idea with the banks, remember, if I play Netflix earnings, these two are going to move together with Google, with Facebook, and so if I wanted to bet on the Netflix upside or downside, I should probably use the other tickers because they will still retain their nervousness or their implied volatility. If I buy a call in Netflix for next week, I'm overpaying for it. In fact, so this is the practice platform from E-Trade. I'm not recommending it, but it is there. So the implied volatility, this is this week, 5 days on the clock, is 50, 55. So if I go to November, it's 30. So there are 20 points premium on a base of 30. That's a huge difference. So here's a visual of it. I'm paying more for this week if I buy stuff for this week. If I buy it out here, I'm paying the going rate. So somebody that buys something here for next week is going to immediately lose on Wednesday morning when they open. That 20 points is going to disappear. So you're going to get a 40% haircut on whatever you bought right away. Gone. So the implied volatility will disappear, the extra, the premium. So let me see. Google does not report next week. So we can see the Google, so 18% for this coming week, and I think it might report the week thereafter, 10 points higher. Wow, nobody's expecting anything in Google. Look how low the implied volatility is, even during its earnings. That's amazing. So I don't know if I said it yet. Where is it? Hide the constellation. I have a feeling that Google is going to bust out in a major way. Spread's okay going into earnings, but if I'm buying a spread, so that's a good question. So they're saying if a single leg is expensive, a spread is not, which is true because I'm selling one and I'm buying one, that expensive thing goes away. But I should stay close to current price, and if I do, I should go out in time because they cost the same. So why not buy more time? That's my concept of it. Now you can get fancy and do calendars and diagonals, and then you'll be using the implied volatility in your favor. So if I buy a call for Netflix 3 weeks out, and I sell a call this week, I'm collecting way more relative to current price for the one I'm selling. So on the morning of, the implied volatility is going to crush the one I sold much faster than the one I bought. So, but you have to be good. And you have to know you have to have done it before, so that works well. Okay, so let's just jump into it. We already addressed a couple of tickers in there. I'm going to go alphabetically, and here are the tickers. So anyway, I was saying that I don't know if I said it. Google, I think, will have an upside surprise. So I wouldn't want to short these tickers. And the easy blanket trade on all of them is QQQ or NDX. just buy calls or call spreads, you'd be betting on all the earnings altogether. All right, so these are the tickers, and we'll start with them alphabetically speaking, and they're well over 100, so hang on to your hats, so to speak. Okay, this is a weekly chart. Aon, I don't know, I wouldn't want to short it. The posture is bullish on the weekly perspective. 7250 might have some resistance. Let's drop into the daily. So it's starting to look like an inverse head and shoulders, cup and handle, whatever it is. It's a neckline, big problem level, 70-ish, and they're dealing with it. So if they can break through, they could rally up. This worries me a little bit, so it might not be easy. I would think they could fade one more time towards 67-ish. That's where I'd buy it. So it's either buy the dip to try to break it out, or buy the rip if it happens. So BDBR. Adobe, I think I have drawings and I don't have to say anything. Look at it. It's into resistance, more resistance above. After this rally, I wouldn't touch it, even though it could continue. It's not an obvious entry point. More likely it's going to fade and try to reestablish an ascending trend. So depends on your time frame. The easy work has been done. Should be a base here, and that turned out to be a base. I don't know when I said these, but this collapse dropped it into a pivot point, base, and then they tried to hold this, and I bet you this used to be one like these for me, and then it turns into resistance going forward. Every ledge is a resistance. Then look, that was a base for the mini pop. It's going to be a resistance here. Not inspiring starting point. Depends on your time frame. Same comment for this one. This is not an obvious entry point. These are strong candles. I would worry about 175. It doesn't look failure, fake out, and they're going back into it. Now this could be the one, but I'm not sure. I would rather buy it down into this zone. This is a good solid zone. This is a strong stock. Look at all the action up here. So they want to base here for a higher high. So long-term investors can be confident that they have support. So dips into 164, 160, 156 if it happens. They're buying opportunities. So in fact, I've never traded this one. Maybe this will be my first on a dip or a breakout. So if I'm long, I'm comfortably long, but it's not an obvious entry point. AFL. Almost same exact comments, minus the super strong support. So it has support here, but it's not super strong. If you lose 51, get out, because it's probably going to 46. Going into 58, there's going to be there are sellers lurking, 57 even. So they would need to bust out these to get to 62. So I could be long here, anticipating this, or I could get long on a dip into 52. How would I do it? Depends on whether I want to own Aflac or not. I would sell puts or put spreads, or I would buy a call spread. I don't know how liquid it is with the calls. Maybe shares might be best. So that's for Aflac. I'm not going to make the noise. Gilbert Gottfried, right? Okay, definitely not an obvious entry point for AIG. I remember trading this one. So, whoa, that's a monthly chart. So I remember trading this one a lot. It used to be a heavy trader, and it used to carry a huge volatility, and then suddenly one day it just disappeared off my radar. This is a weekly chart. Most definitely not an obvious point of entry, but most definitely very intriguing action. So this is the pandemic. They're now trying to break out. Wow. Look at this, how pointy that is from September 2019. And look left. Major catastrophe level from 2018. Remember, the TNX yield, so-called bond yields, were spiking out of control. They hit 3% in February, and then they hit 3.2% in April. And then the markets crashed because of Powell said we're on cruise control hiking rates October 2018. And then they capitulated, and the Fed said, "Oh, we're going back to easy money," and then crashed. Very interesting point. I would buy the dip. I wouldn't chase it up here. I mean, if I wanted to. Okay, so we have somebody in the chat room who is super strong harmonics trader. So I had a few banks come up as don't touch. They have too much love from the market sentiment tool edge, not from a price action, from what kind of money is buying them and how. And supply and demand, that's what that tool looks at. And so the message is beware of being long banks. In fact, they're probably shortable with the XLF. So I would avoid this one. It's not a bank, but I bet you it moves with banks to a degree. AMAT. I definitely regret not having a drink with me. Okay. Applied materials. There you go. Buy a dip opportunity, and it bounced off of it. Let's go to daily candles to see that. Yep, that was a definite buy the dip opportunity. So now it's going into resistance. This is volume profile resistance, meaning it's not only a failure level, there's also a lot of action above. So prior action, like a lot of action above current price, that's I think what they call on Wall Street overhead supply. So as soon as price hits there, they were active before, and chances are they're going to be active again. So it is like a cushion, like a magnet, a muck. You're going on your bicycle and then you hit mud. What happens? You come to a crawl. Resistance. It's going into resistance. I would add at the dip and stop out if it loses support. So if this dip comes to here and loses support, it's going to go whoop and come back to here. It failed. That happens from here. So if I can move this one like that, and we're good to go. I'm not saying that's where it's going. In fact, it wouldn't go that low, I don't think. Probably here. I'm saying that buy the dip with a tight stop. That's fair. So I don't want to scare anybody. Okay. AMD. Good company. Going into a prior fail, that makes it a difficult buy. I wouldn't want to short it. I'm just telling you, if you buy it here, you're buying it into a sharp prior fail when it was strong. Look, cover up everything from here on out. Look, big burst into prior fail, and then it failed. So this is not an obvious entry point. A dip would be better, or a breakout. Like if they take this out on a closing basis and they run, I can trade it knowing that it could fail at any time. That's why I hate these stupid rallies. They just make mockery out of logic. And a good stock will then become untouchable. As I'm on, David, good morning team, joined. Yeah, you missed a lot. Anyway, you can catch up. We talked about the major earnings, the market, and we're going alphabetically, and we only did a couple of big names. AMD you just missed. Okay, Amazon, I think it closing up 3% on a day in the market. Like, what was that all about? Going into a prior fail is not going to scare me. If a stock moves with Netflix, that would be it right here. I would not be short Amazon at all. So I spoke to Dave last week, who likes Amazon, who wanted to go long Amazon. I said, for a trade, you can. A breach of this and a breach of that, they're both trades. And a breach of this, there's also a trade. But add all three together, it becomes a nice big move for an investment too. But it all depends on how fast you are and how you trade it. So if somebody wants to, single options are so expensive that it makes it an investment by default, like all the other big names like that. So I would use debit call spreads at 3160. Somebody's asking 3160. What do you mean? Way back here. Oh, on a dip. Oh, of course. Yeah. So any dip into prior support is buyable. with a stop, because if it loses this one, it's going much slower, but it wouldn't do that all on its own. So what Netflix is going to do on Tuesday or Wednesday is probably going to cause this one to break out of here or not. Personal opinion. If I had the choice of going long or short Amazon right now, I'd be long. If you remember, Amazon had a mega breakout here, get foiled by the overall sentiment. This mega breakout was taking it to like 43 to 45. I think it can still happen. This might be trigger 1 and 2, and then it's gone. Same setup as the IW. Look at the IWM, which I did earlier. If you take away this, it's the same thing. Big range for months, and it busts out of the range, it's gone. So this is Amazon that moves as fast as the IWM, if not faster. So in the right setting, with the right reaction to Netflix, this one could rally. So again, I will revert to the fact the cheap way of playing all of these is through the QQQ. Couple of bucks will get you long calls there versus $30 per contract to play this one. I'm just saying. So, or the NDX. You can see the head and shoulders forming here. So any hiccup in the markets will cause Amazon to be in the 2800s. That's why when I talked to Dave, he was eager. He wanted basically my green light, and I just couldn't do it because from a trader's perspective, it looked okay. From an investor's, it didn't look like an obvious entry point because of the threat that lies beneath. So that's how it goes. I wouldn't short it, and I would throw a blanket trade on all the earnings that will start with Netflix via something like SPY even will work. But the QQQ or the leverage ETF on the Qs, do not do spreads on the leverage. What is it? TQQQ? Yeah. It's impossible to get a fill or a quote. I don't know. ANGI. Oh, is this Angie's List? Well, my son just tried the service and he canceled it. So I don't know. Their model is two-fronted, and it's a lead company. That's what this is. Like if you're a tradesperson or you have a service, you advertise, you pay monthly. And it's an arm and a leg, by the way. And the guy wanted, my son just turned 20, he wanted them to pay like $1,500 a month or something to advertise. And I said, oh, okay, no, bye. And he goes, wait. And they immediately dropped his price to $300 from $1,500. That tells me this company is shady as hell. That's my initial reaction. So, and then he offered him a money back too, which is also pretty freaking shady. And then the calls came in right after that, and then they stopped. And the calls were almost scripted. It's almost like they have a team calling for fake leads. I'm not accusing it of all of this, but I'm just telling you my personal last week or 2 weeks ago. That's what happened in my household with this company. But lead companies make a lot of cash, so I don't know if they can make it work. I can tell you that this will be a pretty good line. If they break through, too bad for this little poke. Otherwise, it'll make it this one. So now I would have to worry about that one too. So 15 or above, it's going. Going into 15, I wouldn't buy it. Going here to anticipate the run into 15 is okay with a tight stop. Has support below, so if it dips into here, it's a buyable dip in order to do this and then bust out eventually. So I didn't mean to badger the company, but I'm just offering you my personal opinion. And I used to own a lead company, so I know how these companies work. All right, so breakout neckline here, breakout neckline here. Which one is pricing out now? I don't know. Whichever it is, I wouldn't buy it going into all of these. That is not an obvious point of entry. This is where people who chase the breakout from here or from here are booking profits. Oh, hello, Kathy. So ARC, one of the ARCs. This is not an obvious point of entry. It triggered a breakdown here. This is about the price target of it, about where it bounced before, and a support level from before. So the support level makes sense. Now the sellers are somewhat in charge until the buyers take it over again. Going into 80, they're going to face some sellers from people that are stuck from this ledge. Going into 85, 86, they're going to face sellers from the actual volume profile. That orange line, look at it, it's a mountain on the left. This is a lot of action. Like we talked about mud, that's the mud. Going into mud, it's going to slow down. Now, if I'm long, I can stay in it. If I'm starting longs, I have to realize that it may hiccup a little bit. I can do it, but I should stop out. Losing this is a restart of another ledge. So I would stop out here. At 71 or lower, I would stop out. I'm not long, but I'm just letting you know. And I anticipate sellers into there. So you have to know what's in it. And if you own any of her other is it genomics? So I would imagine this moves like the IBB, ARC-G. I don't know. If it is, and you're long the IBB or the XLV, you might want to get out of there. Wow, what the hell is this? Holy cow. So not an obvious entry point for several reasons. Better here, or chase it above that. And could it break out of here? Yeah. Look at Upstart. Yes, it could. Look at this. I mean, I'm pretty sure somebody said here, oh, I'm going to short it. And then they got this. So if you short it, stop out. If you want to get long for a trade, not an investment, chase it above that. Or buy it on the dip, anticipating it holds support and stop out. And that would give you this run back up here. Pushed by Fool.com. Okay. They got pushed. They got written up well by Motley Fool. And by the way, Motley Fool is not one person. It's like a whole bunch of people like me who contribute in there. They did not want me writing for them for some reason. It's like a club. They wouldn't even talk to me. I'm like, okay. That was like 10 years ago. Motley Fool. Okay. We're talking about A10 networks. I'm not familiar with their inner workings, but they're going into a potentially good fight. This was an attempt, and now they're going back into it. I would worry about this candle, so 14.2 might and 14.6 might be problematic. So if I'm long off the base, that's a good good thesis. If somebody bought it saying this is a base, and it is, and I want to get long for a swing trade up, I can stay in it. Somebody that's starting into 14, I think there's going to be sellers starting Monday. And so if they can take it out, if they can power through it, I think they'll bust out a 14.67, and that will get you your money. Definitely stop out. This is weird and makes it weird to say, okay, I would stop out at, well, you know, so it's somewhere in the middle between these two where I should stop out. But if, you know, technically 12.7 now is your outline. And get back in here. So when you step out, it's not the end of the world. It just means that I was early. Let me try it again down here. Wait. Okay, AVGO. Like, that's the same chart. Not an entry point. If you want to chase it above 510, fine, but going into 510, not an entry point. Broadcom, yeah, definitely not. Wow, that's pretty impressive for Broadcom. I don't remember why they changed their ticker symbol. Okay, so Boeing had some bad news about 737 Max. Blah, 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 blah. They, you know, old scars came out. The old scabs started bleeding again, so to speak. It's a buy to dip opportunity. So anywhere into 210 is a buyable dip. If you want to technically stop out below 206, that's fine. But I think you have support here and support into 195 or 190. So if it comes down, if it does collapse all by itself, it's a buying opportunity anywhere in here or lower. So the problem is there's a gap open down here. I don't know how that happened right there, but I don't think it's a gap. It's one that markets can ignore. What did I say? 160. So somewhere down here. I think this was such a calamity, unique, that I don't think there's the need to quote fill that gap. I mean, it went to $80. Remember that when I said get long? When Trump came on TV in front of a helicopter and says, we will help Boeing, that was the day you get long Boeing and you don't get out at like $80. What? Okay, so that's the shorter term. It's falling into support and it should hold. If it loses support, it will fill the gap or come close to it. So I will put this just in case it gets there. Bye. And then we'll say, well, that was easy. Button. BAC, get out. I don't understand this. They are boring as heck, but they are acting like tech stocks. Again, I did discuss it with somebody that knows harmonics in the chat room, and they're seeing some bearish stuff in the XLF. And I don't think this price action matches up to this P&L. So this P&L, flat top, does not match up with the price action. Now, what's exciting is how much money they're making. Look at this. Flat top. Look how much more money they're making. Thank you, Federal Reserve. They give them freebies all the time. Who is the harmonics expert? You know him, Frank. It's Cypher. So anyway, he contributes in the chat room. Okay, so we have the price action is just too exuberant in my opinion, and it's definitely way too late to chase, especially Goldman Sachs. I think this time the reaction in JP Morgan was the proper one. So a dip on earnings. Now it's trying to, if you force my hand on banks, I would short them via the XLF. So BAC is definitely not a buy up here. Be big. People asked me about it last week. I forgot what I said. Hopefully I have lines. I do not. Bummer. Going up here, I don't know what this was all about. I don't know what this was all about. It's clearly a fast-moving stock. It's a better entry anywhere in here. But what do I remember? Okay, so that's what I remember. That it's been here before. This is a weekly chart to eliminate as much noise as possible. Look at these tails on these weeks. So it doesn't inspire confidence to start longs up here. I don't know what they do or anything, but just be aware of this. Producer, manufacturing, industrial is probably conglomerate. Okay. Consumer products and digital marketing. What is happening here? Anyway, I don't have time to look into it. It's under $1 billion. It looks reddish. Yeah, it looks not for me. BLNK. Charging companies, you know my feeling about EVs. I don't think they're the future. I think they're part of the future. We just cannot support that many batteries. Good base, better not lose it. You lose that base, you're going for a ride. You try it again later. Here. And here it can extend down to 18.7, 18.8. Going into 3230 is being the resistance, 3250 resistance, and 35 a lot of resistance. If you get to 38, I would get out, book my profits, and try to chase it on a breakout from that. But it would need some fantastic stuff to happen. Now, lower highs, lower lows, the wedge is getting tighter and tighter, so there is a fight coming. I think the first big fight is at 31.2. So if I'm long, I could stay long, but I would stop out. If I want to get long, I could do that, but I would stop out. I would make it $1 amount before it's too late. But I just gave you the levels. I don't remember doing anything with this one before. Well, I'm gonna have to extend my view to monthly. Oh my gosh. Okay, so the stock is broken. This is where you need to do homework to find out if the company is broken. There's nothing from the chart that gives us any clues. I'd have to go back to whatever happened in 2016. So what, Trump promised them something? That was the election, and it's back there. So I guess from that perspective, it's back to whatever happened here. So look into it and see if it's a viable thing to retry it long. Or if I'm long, it's too late to get out, that type of deal. ChargePoint, are they also an EV charger? Same concept as Blink. Same chart, actually. Lower highs, kind of lower lows, long-term bet from last year. So too late to panic. Okay to take a long with a tight stop. I would stop out below 17.5, 17.6, or I would stop out at X loss. A lot of resistance into 22, more of it into 24, more of it into 26 and change. Each one of those resistances are reasons to trigger a buyer. But so far, every touch of that has been sold. So they're selling pops. The machines are selling pops. They need a floor. They don't have it. So if you lose your floor at 18, rinse and repeat. Lower low, lower high, like High Leon. Be careful. They can suck you in. So I wouldn't average down on any of these stocks. Please stop averaging down. That averaging down works so few times and should only be done sporadically on major companies. I don't average down on almost anything. You have a problem. You're just making it bigger. Chewy. Falling into support. Now I know the business is not broken unless there's something that somebody is not telling us. The way it's behaving gives me the thought last week. I was like, maybe somebody knows something I don't. Because if I look at the P&L, there is no way this price action is justified. This company is growing revenue from under $1 billion to $8 billion in 5 years. And now they're profitable. And statistically, they're 3 times sales. Maybe they're scared about the 3,200 PE. Who cares? The fact that they probably prefer to see no PE than 3,200 PE. So price to sales is 3. That's pretty modest. Plus, they generate positive cash flow from their operations, like 170 million. So they're not desperate to borrow to exist. Profit margin rising, that the assets falling. This price action tells me they're either idiots, the expert, and they're scared out by 3,200 PE, or they know something we don't. So poor guidance. Yeah, but that's what I'm talking. The poor guidance from them. No, I bet you it's not poor guidance. It's poor relative to what they were expecting. I bring back the headline and read it and look at the year-over-year numbers. So if the year-over-year numbers, if I remember correctly, I want to say 27, that they grew sales and bottom line, basically. So how is that bad? There is no way. So yeah, they missed their numbers. They're up 30% versus 45% or whatever. Yeah, sold puts at 60. That's good with me. I would own it at 60 and stop out if it's a trade. If it's not a trade and it's an investment, then I would bite. If I usually buy 100 shares, I'll buy 50. Anyway, back to trading the stock. This is more likely a base than not. If the stock market's correct, it can go lower. But at some point, it's going to become so cheap that it's going to be a massive snapback rally. This is a quality company so far, unless they know something we don't. So far, there's no evidence of it. CLF, I've gotten a lot of requests. Okay, so there we go. It bounced off of support, and it's going into resistance. I guess I should have put my resistance lines up there. Anything above here is going to be faced with sellers. So this is going to be a resistance zone, and it's not like a sharp line. And there's another one above it, and above it. So I'll just put it here. It's really not rocket science. It's not an opportunity to enter longs, in my opinion. In fact, the bears, if you look at it, they're drawing a pretty nice head and shoulders. So what these guys want to do, they want to avoid this and then finish the job. In fact, the job would be much slower. This one will go to here. Yeah. So looking left, no, too low here. You want to avoid this. I wish they would let me put a tag on this one. There's no input. Like, I can't put words to it. I'm not saying that's what's going to happen. I'm saying you want to avoid doing this one. These two things are the same. Copper prices, yeah, I don't know. The US dollar affects these guys a lot, I think. Anything commodities, and the US dollar is in breakout mode. It had a bad week, but because it broke out, it's coming back to retest necklines. So if it stabilizes the dollar above 25.2, it's going to put a crimp on all commodities. Gold, silver, oil, blah, 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 blah. So doesn't mean the other ones are going to crash. It just puts pressure. So CLF is not an entry point. And if I'm long, I'd pick my spot where I want to get out. It has support. So this is not a guarantee. It has a lot of support. So dips are buyable until this neckline fails. CMCSA. I believe I wrote it up as a trade and it played out, but you do want to avoid this, so that's still there. Look, it's almost exactly where we drew the lines. That's pretty incredible. So if I have gains from a trade, hear the words trade, I would book them. It's going into a tough spot. It extends from 54 to 57. Look at this freaking candle. So it is, Frank blurts out, tickers. Okay, so if I'm long for a trade, I would book it or be very aware of the fact that it could fade out of it. Well, yes, but it's for the people who submitted tickers. I literally have like 115 tickers, Frank. So you know how to reach me, where to reach me. We'll talk. Crocs. Nope. I jumped. CMTL. Not an obvious entry point. Heck no. Definitely not. Even if it fills the gap at 25.20, it's got sellers everywhere. It's definitely not a good looking chart right now. Be careful if you're long. Coin. So somebody said, it's good with the may have been Frank actually. With Bitcoin. No, it's good with Bitcoin trading up or down, right? This is the equivalent of selling shovels for the miners to let them go dig for gold. You don't care if they find gold or not. If people are trading, this company's future is so bright, they have to wear shades. Because, believe it or not, Bitcoin is here to stay and it's not freaking fake. And what does fake mean? Man-made? You know, I found a new way to argue that point other than to say, hey, gold is the same way. The Mona Lisa, there's only one original, right? But they sell replicas for hundreds of thousands of dollars. So those are fake, but they have a value only for the simple supply and demand reason. They're totally fake. They're prints. Somebody took a picture, somebody printed it, slapped the price tag on it, and there were buyers everywhere. Doesn't freaking matter whether it's fake, man-made, or out of the ground. It has value because of supply and demand. Stop fighting it. It's $60,000 freaking dollars, and people still call it fake. And not just people. Jamie freaking Dimon, the guy that was leading the world in banks. Are you kidding me? Anyway, take this out, and she gone. It has one more seller up here and up here, but I would not short this. I wouldn't chase it with a whole bunch of money expecting a pot of gold at the end or a pot of Bitcoin. But a breakout is tradable, or a dip into 250 if you're lucky to swing it back up there. So I'm going to put my alerts here. And, take this out, take that out. And these are dailies. They have regulatory issues and headlines. Use those to get long. Buy the dip. CRM, I think all-time high. I couldn't touch it. If you're not long, you missed it. Credit put spread. I don't like chasing, Jack. It's better than chasing with a call, but I just don't like chasing. You just have to say, when a stock hits all-time highs, it goes off my watch list. You know the tickler files that sales reps used to use in the olden days? You have 3.5-inch cards, and you put them in a shoebox in order of when you're going to do something with it. When it goes into all-time high, you take that card and put it in the back of the pile. So it's just nothing I can do with it. So why bother looking at it? Same here. I love the company, but up here it can go without me. By the way, did they close the Slack acquisition? That's a big question mark to me. I'm interested because I use Slack for free. Hopefully they don't change that. Okay. We have a second cipher in this room, David. Okay, so this Crocs, you want to avoid this. So you're rallying into my resistance zone. In fact, the resistance starts at 142. So be aware that there's going to be a lot of sellers into 142, 144. If you bought the dip, excellent. Trim, book, whatever, and avoid this. If you want to get long into the prior base with an immediate stop, because you lose that, you're going to here. Okay, so arguably, now that I think about it, this is already started, this red, yellow. Unless they take these out. So I'm rephrasing. The bears are in charge. What? They just rallied? Yep. But they're selling the pops. Onus is on the bulls to take that out. So if you got long, I would trim. For sure. I wouldn't hold it into earnings. I would book my profits. But I don't want to have you miss out on a huge pop, because I don't know. There are 2 pop earnings. 1 down. Okay, so let's help you out here. Let's help you out. Let's see what the markets are saying on Crocs for the earnings. Oh, Jesus. It's not liquid. I would not trade it. Okay, so they moved 10% on earnings, up or down. They have had 2 greens, 1 red, 1 green, 1 green, 1 red, 1 red. So they pop more than they drop. So if you can withstand the gambling aspect of it, hey, it's all yours. Yeah, it doesn't matter. It doesn't really matter. It matters about the trading aspect of it. All right, crowd. Not an entry point. I don't care. You missed it if you're not long already. I mean, if by some miracle they take these out, then you can probably chase it for a trade. But I would buy it into 250, maybe 255. But other than that, you just missed it. So next time it comes down here, it should be on your, like, it's off my watch list right now. If I'm watching it. CTOS. That's a pretty confusing chart. Okay, cluster of resistance above. Some support below. So I guess if you force me, I would take a long and stop out below 8.2. That's how I would handle it. I would exit my longs here. This candle makes it impossible to chase it on a breakout from this level. So I think it has sellers here. You could try to swing it to up there, but this is pretty weird stuff. DFS. What is that? Oh, Discovery. Okay, so American Express reports. These two are like the oddballs of credit cards. I can't believe this one is still in business. 132 is very sharp trigger point. So it's like the IWM's 230. And I discussed it in the beginning. 132.5, break through it. It might be enough to take these out. So I wouldn't be shorted. Getting along into it is tricky. So if you want to do it, you can have this earnings. Yeah, so they have their earnings. So good luck with that. Coin flip. It's pretty big gamble right now. But hey, it could happen. I'd buy the dip into 116 and stop out. But it looks like it has good support there. Okay, Draftkings has some pretty good action-packed potential this week. A whole bunch of stuff going on around it. There's an IPO coming, and it's committed to buying some of it. So if that IPO does well, I forgot who it is, then it may have lift. Until then, I would buy the dips, and if I hold longs, I should expect volatility. Long term, it's a good company opportunity. Shorter term, they're pretty aggressive. So they're likely, like Chipotle, they're likely to be very controversial, binary on Wall Street. I hate it, I love it type of a deal. So I'm afraid that this could happen, but if I own shares for the super long term partial, I'm comfortable. If I want to bet up with a small amount of money using debit call spreads, say for November or longer, it's doable. 44.01, that's pretty accurate. I don't know where that came up. 0.01. 44 is a good entry point, sure. Oh, you always do a penny. Okay, yeah. 44 is a good base because it has been last 2 times. Yes, I do have my trigger right there at 43.8. I guess I should bump it up a little bit. Yeah, 46. I just said 48 would be a good buy to dip. If your number is lower, then yes. And when I say buy the dip, I don't mean like immediately buy because it hit 48. Look at the price action, look at the whole market, decide how much and how to do it. It's an opportunity to buy, to get long. I should say that now. Opportunity to get long, not buy the dip. But it's easier to say buy the dip. Okay, so DocuSign is stuck at a pivot level. This was a hard line they tried to hold, and now they're struggling with it. We knew it was resistance, we knew it was a pivot. It does have support, so they're stuck. So they need time to mature here to come back and tackle and break out of this one. And even then, it's kind of like stuck between a rock solid foundation and a tough spot on top. Maybe good credit put spread if they have enough premiums. DT. Not an obvious point of entry. Maybe closer to 71, but not up here. They could try it at 74 to hold the line. This candle is pretty weird. So use that candle. The top of it would start getting interesting. The stomach of it would be definitely interesting from a trading perspective. That's a confusing chart. Somewhat a small cap, higher lows, failing point, but no sharp triggers. So you're just hoping the higher lows continue. I can tell you there will be sellers into 19.4. I mean buyers, I'm sorry. So it has support. So I can't say get out, but it's hard to see why I want to buy it. So if I'm long, I guess I could sit in it. It has support below. And it has an opportunity above, but it's not a sharp opportunity. So it's kind of confusing. So do your homework and decide. Facebook. Buy. So Facebook going into Netflix earnings. Whatever happens to Netflix, it's going to happen to Facebook. FANG. Facebook is the first one, and is Netflix. So they move as a unit. And if this one dips, I would get long again. I'm not long now. I shared a long and it immediately paid out. That's how I handle this company. And then it gets shellacked. Every time it gets shellacked on headlines, it's an opportunity to get long. So if I'm long, I'm okay staying in it. If I'm looking to enter, I should acknowledge the fact that there's a coin flip aspect to it. So I should give it time. So if I'm using debit call spreads, I should go out in time. If I'm selling a put spread, I should go out in time, not do the weeklies. Just because it's going to be active. But going out in time means that you're going to get into its own earnings report, which is in a couple of weeks. So be careful with that. Good company long term. Go against the grain. I think you'd do well. FSL. Ooh. So major sharp fail, which would be in turn the actual this buy the dip that failed. Now it's the opportunity here. We're going to have to rename it to some sort of a breakout. So it's right here with immediate failing points. So it's too easy, too clean. So they might fail one more time and come back at it. So buy the dip here, and we'll move this one down to here, and we'll say buy the dip for a pop. Or so BDBR, buy the dip or buy the pop, buy the rip. What's the difference between weekly and monthly options? Expiration dates? That's it. What is the difference? Nothing. Just volume. One is more busy than the other. Implied volatility is independent of whether the calendar, unless there's an event, that's my opinion, or circulating headlines, coverage from company A or company B. Okay, we are into FCX. Wait, how did I do FCX up there? CLF. Okay, never mind. All right, so opportunity, NTNT. Look, we go boop, extended it. I'm going to leave it there because I might do a video and that will make for a good point. So I wouldn't be short. If I'm long, I'm super happy. If you break, do I ever look for short opportunities? Yes. I just mentioned shorting banks earlier if you missed it. This one, I wouldn't short. It just has too much momentum, but it is shortable and an immediate stop out. So if I'm long, I should book, trim, or get out and rechase it above because the breakout could extend to 44, or buy the dip if it happens and then chase it back up there. So this one is too far down. I'll put it here, but I'll move it back. I'm going to do a video. Maybe. Okay, FDX. So FDX has popped on our screen as tradable, and it probably played out because it's off the ground. UPS has a better chart, but remember I said I could get long FDX because UPS's chart is so good and they trade in tandem. So that played out. Now it's going into problem areas. So what used to be support now is all resistance. Every support line you see is now resistance. Sharp resistance right here. This one is also resistance. So the bulls have, when the bulls have this much problems above, I think they need like a headline. So they need to burst right through all of these. Like this rinky-dink pop, 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 pop is, I don't think it's likely to happen. So somebody's going to come out and say, oh, it's cheap, we're going to upgrade it. And they're going to go all throughout all of these. That's the best way of doing with it, like what this one did. So now this one is going back into the box. So that's not going to be easy to break out of 200, 197 to be exact, 200. I'm just saying. So same logic that FDX may find some sellers recently, soon, because of this one hitting its levels. But you take out that 200 line, you're going to fill the gap here, which will probably help FDX do its own thing. So it's better long than short, knowing that there's going to be resistance above. The holiday season is not good for them. They become too busy, inefficient, and they start screaming about throughput and mess ups and all of that. That's from prior years. So it's not necessarily a tradable upside. Potential frog. Bears in charge, until that changes, I wouldn't catch a falling knife. I would short pops, but I wouldn't. So this is like Hyliion. Every pop is being sold for months. Don't expect to change until the floor develops. They haven't. They had a double bottom here. It failed. So now it becomes the problem. They're going to retest the bottom at 31. And if that fails, rinse and repeat. So the range is getting tighter. The wedge is getting tighter. So something's going to happen. So we'll see. Either one leg lower or a pop above. So you're going to have to do some homework and see if fundamentally you can get an edge on that. GE, I told you my feelings, and the next day it pops. Sweet. Good job, Nick. So I wanted to be long to catch this swing up and a breakout. It's still there. Nothing has changed. A lot of selling points up top, so there's going to be sellers. But if I bought the dip, I'm really happy on the start. If I wanted to scalp profits, that's fine. It all depends on the portfolio. But I want to be long GE rather than short. And if it dips into the base, most certainly, I have alerts. GLD. I'm no longer long gold because I'm long silver. They had a bad day on Friday. So they depend to a degree. It's not an inverse relationship. It's not a rule. You can't mathematically prove it that the dollar is inversely related to gold. It does impact it on spikes, big way. So, but it's not a rule. So they can both rally at the same time. Why I mentioned that? Earlier I showed you the dollar chart, how it's in the hands of the bulls. So if that's the case, why would anyone want to be gold? Because it does happen. They rally together. It's not a rule that they're going to go opposite each other. This is still trying to break out of the clutches of the sellers. And it has these turnaround, these big fail candles. So yes, I could be long via credit put spread more so than a debit call spread or naked calls. So I can bet on the downside more comfortably, more confidently than upside move. So next time it falls into this, I would sell a put spread with a tight stop. If you lose that red, if you lose that, 158 is going to come, if not 156. So it's a good liquid ticker to trade with credit put spreads. And you always have a buyer below. I mean, gold is going to have value. GoPro, I still think it's going to go ballistic at some point. They have the best cameras out there. And if we're going to have autonomous technology out there, somebody's going to say, hey, you make the best cameras. Can we borrow or license your eyeballs? I'm just saying. Ambarella, does it do the same thing? Or is Ambarella the eyeballs of GoPro? I don't know. So I wouldn't mind being long GoPro as much as I hated it when it was up at 90. I wrote an article on it when they called it the YouTube killer. I was like, are you kidding me? YouTube killer? And it went to $90 per share, and I wrote an article, I said, short it. And that was the end of GoPro. Went down to $9. And here it is. So it's a good long-term bet from this base. It has buyers. And it's cheap enough that the options are cheap enough that I can hold a few calls that are in the money way out in time and maybe sell some covered calls against them. So that's GoPro. Grub, oh boy. So I noted it 3 days ago, or a day before it just went ballistic, and I'm still long. Did I end up selling calls against it? I can't remember, but it was hard. No, because it was hard to find calls I could sell during the week because of how it trades. Let me see. Maybe a visual will remind me. But I'm long because it's a lunatic stock acting in a crazy way. And yeah, see, there's not enough. See, there's no weeklies. So I'm long. What the hell am I long? December or something. 17.5. Yeah. So I'm comfortably long that. Or is it November? I can't remember. No, definitely not November. Okay, so it's a good trade so far. And maybe it does one of these lunatic things. And if it does, I'll just book it. It's a trade. I don't love the stock. I just saw something unusual and I jumped all over it. It's not a valuable investment to me. So I'm not emotionally attached. If it dips into 15, I'm not going to panic out of it for as long as the calls don't lose value. I don't want to take a losing trade on it. So if it's green, I'll stay in it. And if it goes red, I'm out. It's a trade. I'm not emotionally involved. Hall. It's a good base. Too late to panic unless 3.6 is actually a ledge they want to price out. So if they do, it's 2.8 next. But there's a lot of support. It's a micro cap, so do your homework. These things don't tend to respect charts very well. So be careful with it. Hood. So Robinhood is getting hassled by the regulators, but it's at a base. If the base holds, the base should hold because the headlines have been crappy. The headlines overall have been crappy in the market, and it held. And the price action has gotten so much tighter than before, so they're building a base above the entry IPO. So there's no reason to panic out. I do have, like, if it dips into 39, it could be an opportunity to start looking to leg into some. By legging into some, I mean like taking a few longs, but not all in, because it could lose footing and just accelerate lower to 37. So I have here and here. So start looking, get long, type of a situation. I do like it when it falls on headlines. They have 30 million users, I think, so they're going to make it work one way or another. HB, I don't know the fundamentals anymore. It's not an obvious entry point on the short term because of the failure from the 27th of September. So it might have some what they call overhead supply. And it's a descending, but it has enough, like this one is a good base because of this price action. But I couldn't tell you that it cannot fall into that one. So losing this 26.5 could get you down to here, which would be a buying point. Arguably, it's pricing out this head and shoulders. So how big is this? Take it from here, and that's the worst case scenario. So anywhere in here is a buy to dip. Look at the overhead supply. There are a lot of sellers up here. Time your entry that way. I don't know if it's an investment long term. But from a trading perspective, what is this? HRVOF? Oh my God. Oh Jesus. What is this? A $14 million cap. Yeah, there's nothing I can tell you from this chart. It is wherever it was at the beginning of the year. So you're going to have to do your homework there. Cannabis stocks, if I were to invest, it would be Tilray, and look how crappy that chart is. So I'm not inspired by this one at all. HSBC. As a bank, I would not touch it because it's always like a black cloud of, oh, they had deals with this and deals with that. So if I wanted to do a bank, I'd stick to U.S. banks, maybe Citigroup, but going into 32 is a problem. Breaking out of 3250 could bring it to here, which is a massive problem. So if I'm long, I would trim and book and re-engage long to try to get to there, but it's not inspiring confidence. Solid support below, it looks like. So maybe a credit put spread, but I don't trust it from the headlines perspective. And this is a weekly chart, by the way. A chart that acts this badly when banks are doing so well should raise a lot of concerns. HUT. Okay, let's go back to the daily chart. Not an obvious point of entry, just look left. That's all I have to say for that. The breakout from here could have huge upside potential, but until they clear 13 with confidence and close above that, that upside potential is in danger. So it all depends on how quickly you can trade. So how much is huge? Well, technically, it should be as big as the bowl that they just did, which is 11 to 4. So $7 of upside from 11. So this could go to 18 technically. That's what Bitcoin did. I drew something like this in Bitcoin and it came to fruition. Intel did this. Snapchat did this too. Like off the top of my Oracle, I think did this too. Off the top of my head. When a stock Apple did this a long time ago, before the 2 splits ago. Before the first split. IBM, my least favorite tech stock, is showing some promise. Believe it or not, it was acting well during the malaise. So breaking out of this one could get you back to 154 or 152. I would exit above 150. Technically speaking, the bulls are in charge. It's a bullish posture. It may get the benefit of the doubt from Netflix and such. So the idiotic behavior of the stock tells me don't argue with it. Don't short it. If you want a really sharp level, 147. And above that, 148.6. Write those two down. 147, 148.6 could be important. Buy the dip into prior bases. The first base is 140-ish. Second base is 137 to 134. How would I buy the dip? I would sell a put spread. Or buy a call or a call spread. Intel. Okay, so we have INTC. I think I shared the opportunity saying that I want to be long Intel because of the Rodney Dangerfield effect. It gets no respect, even though it is a massive, it's like 5 times and 8 times bigger than the other 2 competitors that get all the headlines. So yeah, it's boring, but it's still the beast in the sector. So being priced cheaper than a bank is ridiculous. So own it for the long term. That's my take. It has resistance, but it's also an opportunity. Right, that's what I hear. But if you know about it, Sam, that means it's mostly priced in or getting priced in. Credit put spread, maybe, yeah, but I would even own it. Calls, shares, even sold credit put spread when I shared it 3 days ago or whenever I did last week. And buy calls or call spreads. And if I haven't bought anything, I would wait for the breakout. Sell puts at, you tell me, wherever you want to own it. If you don't want to own it, then don't sell a put. So you pick a level where you want to own it and sell a put there. You're not selling to make money off of the put. You're selling to be long the shares. Intel. So IR, not an obvious point of entry. This is worrisome. So if you rode it up to here, I would consider booking some. Or if it dips back down to that base from which it sprang, I would get long it again to try to do it with a stop, because you lose that base. What is this? Oh, so these are municipal. What is this? So this is like an exaggerated version of the TLT, it looks like. You know, big dip, rally back, and a big dip now. Big dip, rally back, more exaggerated, and a big dip, more exaggerated. So pretty wild. I guess it's a better long than a short. If this is what I understand this is, it's like Tina helps it. There is no alternatives. So the higher yields go, and the more CNBC is saying runaway yields, it's like a catch-22. They can't run away anywhere, because the higher they go, the Tina effect gets into the way. All the bonds overseas, although I have to check again, are negative rates. So if you want to buy bonds in Europe, like you would have to owe the government's money, which is ridiculous. Who would do that? So they are forced to buy U.S. bonds. And this is what helps this one go up, like the TLT. When there's a bid into the U.S. bonds, the TLT rallies, and I think this looks like the TLT. So that's a good base. I don't know what this is. Do they have options? Very illiquid. Yeah, I wouldn't touch that with options. Okay, never mind. Yeah, but it's got a good future to it. I would trade it like the TLT. In the money. Jazz. All right, so it's on the verge of bursting into 152. A lot of resistance throughout. So be careful. You know, it's a pharmaceutical. It's probably going to need a headline to reverse that. So I wouldn't be so excited about this burst happening, but you do your homework. So I'm more comfortable with the base than with the upside potential at this point without a headline. And we can't forecast headlines on the chart. So J&J did this. I think they report earnings this week as well. Yep, right there, Tuesday. So be careful. No doubt the earnings should be strong. This is a good company with excellent pedigree. I'm looking at prior earnings reaction. Plus, pop and fade. Fade. So 2 ups, 2 downs. Technically, the bear's in charge. Technically, 165 is going to be a huge resistance for them. Okay, so they priced this one almost, but not quite. I was generous. This one should extend down to 150. So on a bad reaction to earnings, notice I didn't say on a bad earnings report. On a bad reaction to earnings report, it could fall back down below 155, in which case it would be a good place to start looking at longs. This is where I'm regretting not having a drink with me because I'm starting to yawn. Okay, so sellers into 165, but the earnings are going to be binary, so it's not going to be gentle. It's a gamble short term. If I wanted to get long, I wouldn't take a full position because of this question mark just for this week. And I would use longer term bets. So let me see. I mean, it should be a boring stock as hell. So let's see the implied volatility. Remember how I said the implied volatility gets, oh my God, during the earnings, it's 28 and 24 and 26. So yeah, they don't expect much. Yeah, okay, it's 8 points higher than normal, but it's still low volatility. So you're still overpaying, but they're not expecting fireworks. So, you know, I guess you can take half position into the earnings. I usually don't like to because it's like gambling short term. KPLT, Catapult. So the sellers are in charge until that changes. I can't trust to what the hell is this? So this is a very confusing chart. You could say, you know, if I'm long, I would stop out below 4.4. It's a micro cap. I can tell you there are sellers everywhere here. Lower highs, you can argue for higher lows, and you can say something's going to happen. I don't know which way. If I'm lucky and I can get out at 4.4, if it goes wrong, that's great. Otherwise, I'm going to ride it and get a big payout out of it. So be careful. It's wound tight. L-I-C-Y. Speaking of wound tight, this one is super tight. Look, from here to here, ping pong, and now it's getting tighter. Pinpoint. Where? At the point of control. That orange line, I didn't draw it. That's exactly the busiest point. So something's going to happen, and I don't know which way, up or down. So be careful. There should be some support at 10.8, and a lot of resistance at 12, and then 2 secondary lines. At this point, it's a coin flip. Hey, somebody needs to mute their mic, please. Okay, lemonade. Okay, so I'll do it. All right. Okay. So lemonade had a pop and a fade. Wow, a big drop. So I think I shared along, maybe in the chat room. I'm not sure if it was official write-up. So I'm a little worried as to why the Wall Street doesn't like it as much. It's a good concept. It's doing well. The stock is not. So you see how they're selling the pops? So onus is on the bulls to hold the floor so they can tackle this line to break the habit. If they can get to 74, there's going to be a lot of sellers there, but they would be breaking the habit, as the song goes from Linkin Park. Good song. If they break out of this one, they will get to here, same battle, but they would be making progress, because at that point, you would have some sort of an ascending higher low. So having lower high is fine, as long as you stop making lower lows. Like here, they stopped, and then they lost it, and now they're going back into that neckline. So it's not easy from here, but it's doable. Long term, I think they'll be fine, but they need help from the whole market. Loco. Ouch. So judging by the one next to my house, this company sucks. I have to drive like 20 minutes to get one that delivers quality food. So having a company be this inconsistent tells me that their operators don't know anything. I'm a little harsh on restaurants. I used to analyze restaurants for a living, like 400 of them. So I know what I'm talking when it comes to restaurants. This is chicken. You know, you can't mess up chicken. So, what? So the neckline is 16.5, and they just lost it. Technically speaking, I can't tell you it's not going to 14 or 13. So I would not touch this falling knife yet. Pay attention to the operations of this company. If you want an example of what a super restaurant does, look at CMG. Statistically, it's dirt cheap, even though people say it's so freaking expensive. It's not. Trust me, it's not. So income statement, it's okay on the top line, boring bottom line. All the restaurants I know, their bottom line exploded because of COVID in a good way. Believe it or not. I have a friend who owns 50 restaurants, and when I saw him after COVID hit last year, 2020, July of 2020, we went on vacation together to Cancun. So believe it or not, during the COVID, we were like the only ones at the restaurant, at the hotel. And I said, I felt for him. I didn't want to talk business because I figured he would be decimated. He goes, we've never been this profitable. I was like, what? Yeah. He goes, we're like running on skeleton crews because we have to. And there's no sit down, it's all takeout, and the margins are incredible. Yet this company can't make it work, so I question their operations. Loco. LRCX, I believe they report earnings as well, so there's that element. And can you imagine them saying anything good about supply and demand? So if they do, then you have a miracle pop. Otherwise, I expect it to be a bearish tone, saying that we're doing great, but we have to look out for problems from the supply chain, because if the CEO senses that they have cover, they will throw everything bad into that cover. Like if they believe it or not, there's financial schmutz they can do to cover mistakes. So if they take a big loss on something, they have slush funds to where they can move money around to hide it. And then finally, if they get cover from one incident that's not their fault, like the Globe now knows that there's a problem in supply chain, so they will throw it and show it in the P&L and say it's like a one-time charge. And then people will say, oh, okay, they'll give them a pass on it. So because they say, we're going to get hit anyway, so let's take the hit on that other garbage too. So they'll make it surface. And that's what happens. And they throwing the kitchen sink is what they call it. 522 is a good place. Yeah. So if the reaction is bad, I would confidently catch the falling knife in this company. It has a good reputation. I expect a lot of resistance. If they, by some miracle, get up above 620, it is chaseable to 660. And if by miracle it takes that out, she gone. Don't even short it. So credit put spreads are good if you don't mind taking some heat, and if you don't mind dancing out of them in case of a debacle, or after the earnings is the easier trade with conviction. It's a good company. Or how about this? You can trade it using MU, Micron. They'll move in tandem. 33 seems pretty pivotal. I don't have to tell you that. So as long as above 33, you've got support. But going into this upside debacle is not inspiring for me to get long. There's going to be a lot of fighting here. There has been in the past, so I anticipated going on. LW, I think somebody had misspelled it first, and 2 people asked for LW. And I don't know who that is. The company. 62 is a problem. 54 must hold, otherwise rinse and repeat. Same here. This is your new 54 down here. Or 60. Or 76. You see how it's bleeding? So bears in charge. Well, the only good thing you got is if you're on the weekly chart, this is the COVID low. We all know that doesn't mean schmutz. Look at Las Vegas. It got to its COVID lows, and it's a company I recognize with a better P&L. This is I don't know what this is. It's a boring P&L. So I shouldn't say better P&L. Actually, Las Vegas, not right now. They're in the process of bringing it back to being better. So bears in charge. Overall, you do have cover from the weekly chart saying that we're getting close to COVID lows, so we should have more buyers than sellers. Fewer sellers at this point. Maths. Consistent. Trigger at 16. Up. First trigger is at 15.2. 16. I would definitely exit anywhere around 17.7 and up. And know that you have a good base below you. Small cap. Just under 2 billion. So you have to do some homework. There are sellers here. I mean, I don't having the sellers here was kind of like it's coming. If you asked me yesterday, I would say it's not a good long until it breaks out of this. So buying it into 13 would be the alternative. But it's a tight trade and tight stops. It looks like a good trader. MGM, I just made comments about Las Vegas. This is not an obvious entry point. Remember I shared a trade with Hilton because I wanted to catch Las Vegas falling knife. It was on the Macau headlines, but I didn't know the exposure all these companies had, so I went with something safe like Hilton, and MGM would have also qualified. Well, up here it's definitely not an obvious entry point. Wow, that's impressive. Okay, so that's a monthly chart. Yeah, this was a fight back in 2005 and 2008. That's impressive. So, hey, go with your gut. It's not for me, but it could run to high heaven. But it's hard. If I take longs now, I would stop out really, really, really fast. Knee. Not an obvious entry point into 83. There should be a lot of sellers there. Buy the dip into 79 if you want to try it again to take it out. That's earnings are coming, so there you go. Flip a coin. So the earnings reaction, we don't know. It's just a coin flip. I told you everything that should happen without an earnings report. So how will that expedite the move and in which direction, I can't tell you. Netflix! So if you're long and you don't book profits going into a binary event, it's on you. I know I shared a long weeks ago, so that was a massive win. I would definitely book it and not short it. And if I wanted to leave some longs out in time, I would choose like a December debit call spread and close to current price. So, hey, if it has another burst higher, then I would benefit. So I got to tell you, the rhetoric is positive. Squid Game is all over the headlines. I tried watching it. I couldn't get into it, but my friend said, oh, it was great, so I have to try again. It doesn't matter. What does matter is how many new signups they have. I remember last quarter, they had a bad report because of that aspect, because it lives and dies by how many people it can sign up. I have to admit, that's all I'm watching these days. I have Amazon and I have Netflix. I used to ping pong between the two, and for the last 3 weeks, I've been like defaulting to Netflix, and they hooked me. So they're doing something right. So it's all about expectations, and it's all about international people signups. If that number disappoints again, last time it was mucky. I think Reed Hastings is too proud to deliver another mucky report, so I wouldn't short it. But it's a tough long after this rally. NEO, told you, buy the dip in NEO, and it played out. It does have resistance right now, but that doesn't mean you short it. Tesla is on a tear, which adds problems to this one, because if Tesla fades, this one trades with Tesla. So dips in NEO into 35 are buyable. Into 33 are definitely buyable. Below 33 could trigger a bear, and I would buy the dip at 29-ish. So it's a matter of getting long at what level. And right now it has a lot of resistance, but we've seen it burst through resistance before. So it's a better long than short, my opinion. Longer term, I'm almost never shorting it anymore. I have shorted it before publicly with you, but it was on specific situations and they played out. Therapeutics companies are pretty wild people. I would not use credit spreads with them. I would do homework and situate myself to capture one of those headlines. The easiest way is to buy a call spread or a put spread if you're thinking it's going to get denied something out in time to capture that incident. So in this case, 140 is resistance, 152-ish, 155 is resistance, and anything above that is resistance. If it loses 119, I think it fills the gap to 190, at which point it would be get long from below 90 from a trading perspective. But these are, you need homework. I mean, people who trade companies like that, they usually specialize in knowing what's inside these companies. It just helps out. Nucor, not an obvious point of entry anywhere through 108. There's going to be sellers. Better hold, otherwise you're going down here, which would be a better entry point. So sellers, book your profits, reload long, tight stop, reload long effort number 2 if first one fails. NVIDIA, we talked about AMD earlier, not an obvious entry point, but boy, you can't short that one. Look at this reversal. So if you want to point to something, 225. This still is a possibility, not a forecast. You have to be aware of it. There is support right here. Can we steal one? Okay, so we can put one. There is support right here. So again, where is it? Support. I'm not saying that's what's going to happen. I'm just saying beware of it. And we have fails versus support. The battle will continue until they break out. And if they do break out, 240 is doable. If not more. 245 is doable. This one will get priced out. So, all right. NVIDIA, good company. Nothing to shame it. Okta, not an obvious entry point, but I remember this stock runs like crazy. So be careful. This is worrisome, but it's not a death trap. So it is a pivot zone where it's at. In this case, when you run into a pivot zone, it's more of a resistance. So how about this? How about it does that? What if it, it fails next week and then comes back? Whoops, what happened here? Oh, this one. So it fails next week and then comes back down, I don't know how deep, and then it comes back to here, and then it finishes that. And in this case, it should be as big as this. So if I do this, I'd be ignoring this. So I'll just put it here. Maybe it does that. So okay, 261.5 would be a trigger. If they close above that, that would be the trigger to do this. Or buy the dip into any zone that looks good to you here. Anything around 248 or lower. So if they have a red candle on Monday, Tuesday, it's a buyable to swing it. OMRNY? What the? Flows. Not an obvious point of entry. So if you're a Fibonacci person, this crash, this about halfway up, and it matches up with this, not inspiring. Maybe a revisit. That's pretty choppy. I don't know what this is, but electronic technology. Be careful. The Witcher is coming, somebody mentioned. Oh, that's good. It's on my watch list, The Witcher. Pen. All right. I think we mentioned Pen in a positive way. Wait, did I say DKNY buying into? Maybe it was Pen. So earlier, a DKNG, I said that they're buying into an IPO. Now I'm doubting myself. Maybe it's Pen. So rewind. Very pivotal point at a breakout. I would not want to be short. I could be long. If I'm not long and it dips, I would get long. Pen is a good company long term. Shorting it as a thesis is ridiculous. So it's just a matter of time. It's a better long than short. I could sell a put spread. I could sell puts to own shares. It's a better long than short. PLTK. Are you sure not PLTR? No, we'll go with PLTK. Ooh. All right, very sharp line, 29. Well, this makes it 29.4. But you take that out, you're going way up. Bulls are in charge. I would not want to be short this one. Be careful if you short this one. PLTK. PLTR. You know my feelings. So I loved it. I've liked the company for a long term, and when it went into 29, I said it's not an obvious point of entry. And let me see here, dip. Okay, so I'm trying to zoom in with that. Okay, so I said resistance and opportunity. So many other lines now developed. It came in like this whole zone. This box is still in effect, extended. So you're going into prior fails, and there's going to be sellers lurking, but it's not a reason to short it. So I either get long on big bad days by selling puts, buying shares, or buying calls or call spreads, or selling put spreads, or chase breakouts. So the first breakout next week is 25, and there's going to be sellers attempting to lid it at 27. If by some miracle it breaks out of this one, 29 and a half or whatever, wherever you draw your line, it's gone. Long term, this is definitely a long, definitely with confidence. So see these bubbles I drew a long time, they're still in effect. 26 and change. The prior, it remembers its levels. Like where it failed, look left. It's been a point of contention from last year, almost a year, 10 months. So Palantir is a buy on dips, and if markets crash and it gets below 20, it's one of the ones where I will dump a lot of money into. PRG. I'm really not familiar with the company. I don't have any lines. It has a base, and lower highs is okay as long as they hold the base. So it's okay long, and they just need time to tackle every failing point. 46 is one, 48 and change is one, the big one is 50. And if by some miracle they get up to here, I'm out. So if I bought it here, anywhere from 52 to 54, I should consider leaving it for partial loss. So this is where if somebody doubled down here to do that, to exit somewhere around into 50 to get out of this position, I get it. But You have to do homework and know the company inside and out. You can't just do that. Get in now with a credit put spread. I don't know. I've never heard of it, so I doubt it's liquid enough. If you don't know the company, why? It's like, why would you eat escargot when you still have chicken? So, you know, people say, oh, escargot, if you put butter and this on it, it then turns out to be not so crappy. Yeah, or you can eat chicken. So, in this case, we're looking at Qualcomm. So I lost track of what they actually do. Are they still tied to Apple? Are they not? Massive company, no doubt. So it was a buy to dip opportunity. I remember something about it. I think I've written it up for some reason. Let me see here. Move the thing out of here. And anyway, so I'm looking at a different screen right now. Sorry about that. Bear with me 1 minute. Qualcomm. Yeah, I have written it up. I just cannot come up with the date. Anyway, so it's definitely not a place to panic out. So now you have an established base. If you're long, you're comfortably long, acknowledging the fact that there's going to be a big fight in this zone. 135 through 132, 130 is going to be a lot of sellers. This is a heavily trafficked area. So it's that mud we're talking about. So in this case, every ledge they tried to hold, every buy to dip failed, is going to be a problem. And I'm going to zoom out to a weekly and see if we can get more exposure. Okay, now we have a better picture as to what's at stake. These weekly, it's like the IWM. They don't want to be here, they don't want to be here, they don't want to be here. That was a fight before, and they used it as a base for all of this, so they're testing it. That's third time with force. So it better hold. If it doesn't hold, you're going to have an opportunity to get long at 110, maybe 103. So I will put an alert here to buy it. I will put an alert here to and I will put an alert here to definitely get long. Here, you see this, I'm answering a question right now. Expect sellers. In fact, 140 I would expect sellers. Every pivot zone. So there's your plan of action. Here, sellers, resistance. Okay, so I'm not going to add another word to it. But good company. Let me see P&L. P&L. Yeah, boring P&L, but huge. So can't argue with it. QFin. Not huge. Good base, better hold, higher lows, lower highs, coming to blows. The demarcation zone is between 22 and 19. So 18.6 to 22, that's the tight zone. Break away from these two lines. If you break away from 22, 22 and a half, you get the chance to get to 26. Repeat the process. Big fight there. If you break away from it, you could go to 32, but those are not going to be easy. Versus a support that is clear. From here, from here, from here, from here. So I'd be comfortable long this company, knowing my demarcation zone line. If they lose this one, oof, get out. We don't know where it's going. QFin. Qs. I already said, be long the Qs if you want to bet on the earnings. Be short the Qs if you bet on the earnings. Bad reaction to the earnings. Big pivot zone at 374. I think the buyers have an opportunity to overwhelm the sellers. Just because how long has sentiment been sour? For a couple of weeks at least. Everybody's worried about X, Y, Z, 1,000 cuts in the headline. I told you not one of them is lethal. So usually those just abate. You just lay down, you cover your wounds, and you're fine. Not one was lethal. So without a new shoe to drop, when the buyers take this much control, I worry if I was a bear. That's it. That's what I'm saying about that. So if you force me to be long or short the Qs, I'd be long. Riot. If you're still using Riot to bet on Bitcoin, I mean, it's doable, but Bitcoin is flying up and away, and Riot is not, so it's not a good bet. Riot all by itself has developed a base. Look left, base, base. This is it, and it's extending days. So comfortably long with a lot of triggers. Almost weird. So weird tight situation. Something's going to happen. In fact, I'm going to put an asterisk. Last week I acted on the asterisks. GE was one of them. So very tight situation. I'm okay being long riot. Credit put spreads if I can withstand it. Sold put if I want to own it. Very speculative trade. Very speculative stock. If you break out of 40, you're going to 56 with a lot of resistance. So that's looking way ahead. There's so much in between. That doesn't mean that I didn't say buy it, it's going to 56. If you heard that right here, you're just not listening right. I'm saying it's very tight battle right now with a very hot stock. And they don't break out gently. They burst. There's going to be a lot of fighting into 40. But if by some chance they get up above 40, one last line around 43, 44, but 56 might be the next stop. That's the story there. I'm interested in it next week for a trade. Roku, buy the dip, always. Yep, I would be comfortable long. It bounced where it wanted to bounce. It should have bounced. There are going to be sellers into 360, but this is a very fast moving stock. So if I'm not long, I can get long with a tight stop. Earnings 2-3 weeks out. If it gets to 340, it's going to be sellers. If I'm long and it gets to 370 something, I would book it, trim it, sell a call spread or something. Actually, I wouldn't do that. I would just book it because I've done that before with tickers like this one, like UPST, and I regretted it. So book the win. In and out fast. RTX, that's Raytheon, I believe. Not for me up here. Definitely not for me. I don't care what kind of an opportunity it is, but know that if it has another green day, it's going to continue rallying, but it's going to have to do it without me. If I'm not long, I should be man enough to say I admitted it. I missed it. Look at that. That's a good idea there. Huh. So indirect play on Netflix is being long Roku. Genius. Thank you. So if you wanted to bet on Netflix but you're unsure, the Qs could work, Facebook could work, but Roku might also work. Or Disney. So I wish I'd mentioned those earlier. Thanks for reminding me. That's great. For this one, not an obvious entry point. Not for me. Starbucks. Okay, so that's a pivotal zone. Too late to panic. If I'm long, I'm comfortably long. If it loses 109, per my notes. But if it comes down to here, buy it. Get long somehow. If it comes down to here, get long with an exclamation point. Here, I would expect sellers. Let's go back to the daily. Whoops, not hourly, minute. Okay, tight range of late. You've got your two lines. Look, I just did them blind. So one here and one here. As long, it should ping pong inside those two lines. And then if one fails, they overshoot in that direction. If this fails, they overshoot in that direction and fill the gap. It's a good trader there. So maybe a credit put spread, anticipating an upside move. Maybe even an iron condor. But this would preclude me from doing that. Okay. Starbucks SE. Volatile name. Holy crap. It's almost 2 hours. Okay, not an entry point. That's all I can tell you. Buy the dip, maybe. It's too late. Silk. Resistance up here. I don't like it long into all these failures. Has good support. So you can stay long in it, but it's just weird how it trades. I think there are easier trades than out there. So good support, a lot of resistance. Onus is on bull to take it out. SMB. Schlumberger, I think, reports earnings. I would not want to be long that into a coin flip. If I am long, I should book my profits. If I'm thinking of getting long, I should know I'm gambling. It could work out, but I'm totally gambling. SoFi, I love the company. It rallied. If I'm long, I should book some profits. 21 is pivotal. If I look left, it has had a lot of action, pivotal action. Look, flip, 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 flip. So Up here, it's not an inspiring new long. On a dip into 17, 18 or 17, yes. Reload for taking out 20. So what I want to do basically is see if I can do that. Oh, okay. Do this, and this one will give me that. Sellers lurking, and it's approaching that note. Resistance opportunity, played it out. Now coming back and revisiting the neckline-ish is normal. Coming back to the failing point, if it does indeed fail, out. So that's the proper price action in SoFi. Love it on dips. I would sell puts on dips. I would sell put spreads. I am long SoFi at 17.5, I believe, for December. I have sold calls against it last week. On Friday morning they shook me out of them. I sold 22 cents. I bought them back for 9 cents. So I left half of my profits for last week on the table, but I stayed long the stock comfortably. So I didn't want to mess with it. It was 19. It was a $20 call I had sold, I think, and it was 19.8 on Friday. The high on Friday, 19.86. I was like, I don't want to mess with it. I closed it somewhere below that. So on a dip from 19.8, I took the advantage and booked 50%. Okay, SPR. I don't know what that is. Spirit. Oh, I know what that is. Yeah. So it's falling into support. So if I'm still long, I'd see what happens around 52. So I'm risking $2. So be it. But the opportunity to swing back up and take out this failure is exciting enough for me, and it looks like it's a decent company so far. So the P&L is damaged from last year, but it has a good reputation. Technically, it looks okay. So I'm comfortably long for that opportunity to swing back up there. Okay. Square, always a buy the dip opportunity. Has a lot of resistance, so nothing to do except sell a put spread maybe below support. Buying a call spread, I would make it long term, so that betting on the company and the market, that's doable. Visa, Mastercard. Okay, so these two are exciting. Visa is, I think Mastercard also, I remember talking about it, but they all have sell points. So they're going to need a burst. American Express reports on Friday, but I still don't think that that's a good enough trigger. Maybe they suffer with the XLF dip, if I'm right. If Cypher and I are right about the XLF, maybe they suffer too because they're banks at times. They're perceived as banks. They trade as banks. SDNE, I'm done trading it. I thought it would do better. It cost me money. And then it pops 11%. I'm done. But it's going into a prior failure, but I couldn't tell you that it's not going to run 100%. I don't know. It's a freaking gambling company. It's Shopify of Brazil, I think. That's probably the best way of saying it. And there's so many. I've tried trading Brazil before. I just have no luck with it. So I would just stick to what I know. This is a pivot level that from which they fell, so I anticipate sellers there, sellers here. But an 11% move out of nowhere is strong. That tells me that someone is doing something about it. Hey, if you're still long it, kudos to you. It's going to have to do it without me. This is not an obvious entry opportunity for this company. Whole bunch of failures. Maybe a dip back to here, and maybe break out from there. SDNE is not like a firm, I don't think. Do your homework. The way I understand it, SDNE is a platform to provide online shopping based in Brazil. I could be wrong. Do your homework. A firm is more like SoFi. Okay. And PayPal now. So SYF, base, resistance, ping pong, which side breaks out goes in that direction. Tacos. Oh, okay. Oh, Del Taco. I might eat Del Taco today. I don't know. Maybe Wahoo's. So Del Taco falling into support. This is like El cheap Taco Bell. And I haven't been to a Taco Bell since I went to Del Taco. That's the plain simple truth. And in my neighborhood, it's super cheap. And it's all crap meat anyway, so might as well pay little money for it. It's like taco meat. What's in the meat? So mystery. base is there, so I wouldn't panic unless 8.6 fails, but this is a considerable drop as an earnings reaction. So read the earnings and see what they reacted to. Actual shrinkage in the number or a disappointing forecast. That's a viable dip. So here or here, it's an entry opportunity until they fail. For Del Taco. Tesla is, are you kidding me right now? So what? When it broke out of here, I said 790. It delivered and over-delivered. And I think over the last week and a half, I've done videos and discussed it with you, directly or indirectly, where catalyst to 835. Guess what? 835 came and went. But I know for a fact that I've used these words, at least on a couple of presentations I did. It could go to 900, and if it does, 1,000 will become the talk of the town and will happen. So I would not short Tesla. It was doing well when sentiment was sour on Wall Street. That tells you that whoever was buying it had so much conviction. So imagine if we have a bullish week in the market this week. You think 900 is going to hold this company? No way. She gone. So do not short Tesla, please. There are other. Don't short Tesla. There are other injured gazelles. Tilray, I freaking give up. Are you kidding me right now? $9, single digits? Okay, so if you believe in cannabis for the future, this is the largest company out there, I think. Largest or second largest. And that's what it's doing. So, very unusual price action. I'm going to do a lot of research this week. There might be a huge opportunity. I don't know. The White House is really dragging its feet at helping. How easy is it to legalize marijuana in the U.S.? What's standing in the way? You have to do some legal research there. So it's not like it's a panacea. It's the headline effect, the psychological effect. Like I know for a fact. Well, I knew for a fact that they couldn't bank freely. Like if you wanted to do a deal and buy a pot company across borders of states that don't contiguous have legal marijuana, like you can't jump states borders and do a deal and say I'm going to buy out this other company. It'd be like a RICO break or something. Anyway, I don't understand. It's a falling knife. It has no bottom. So if you're taking longs, which I do have, it costs you money. So you're just hoping it stops falling. TSN, Tyson Foods. Yeah, now we're talking political. I have no idea. So 81 or above will bring buyers that could break through here. Higher low, the bulls in charge, the buyers in charge. Momentum buyers would chase it above here. I don't know if it's going to be easy, so maybe it hits here, it fades one more time. So buy the dip into 78 or chase it above 81 with a tight stop. Tyson Foods. TTD, the trade desk. Not an obvious entry point just because I said resistance and more resistance, but you take that out. This expanding megaphone, whatever it is, when they take out the top line of it, they overshoot. So 88, 89 will not stand in the way. So too late chasing it easily. It's I guess if you take longs, stop out on dollar amount, or wait for the breakout, or sell a put spread and then add call spreads after the breakout. This way you just cover all angles. It's bullish. Twilio, almost exactly the same comments. Exactly. So if I wanted to get long by selling put spreads down here, and Twilio will give you the premium. They do carry. But it does move fast, so you better have a strong stomach. 370 is a big failing point. If you take that out, 410 will come in an instant with a lot of resistance in between. So exact comments for those two. Twitter. I haven't looked at Twitter in a while. Stuck in a rut. Almost similar posture, but I don't trust it as much. A lot of resistance around 64, more so around 67. So those are two failing points. You do have support. So credit put spreads okay. Avoid this if you can. If not, just wait for this to unfold and then trade it afterwards. Otherwise, know that, okay, so if I wanted to get long for the earnings, I do it now and get out before the earnings. So hopefully like Apple, if I got long Apple, which I am, and it rallies into the earnings, I'm out. so you don't have to gamble the earnings, and leave maybe a small position there. All right, Twitter, Uber. Whoa, break this out, you gone. So they broke the box. This was the upside potential. They're dealing with resistance lines, so everything is on plan. See? This was the playground. This was the target. They triggered above the playground, dealing with resistance, hoping to get to the target. Can't say it any clearer than that. Nothing changed. We looked at UPS. This is not an entry point. Okay, similar to Twilio, but this is not Twilio, and it's not a descending wedge. It's more of a flat top that recently descended. So against that, they say buy the third touch. So I guess I could draw a line here, and this was 1 touch, 2 touch, 3 touches. And if you had bought this third touch, you would have ridden it all the way to here. Now, if you're not long, the thing to do is to buy the breakout from here to get to 210. Close this gap. Wow. So still inside the box, still waiting to break out. Maybe it's too late to start longs, but if you twist my arm, I'll sell a put spread. Earnings are coming. Be careful. Upstart. I don't know what to tell you. If you're asking to short it, I'm not going to tell you to short it. If you're asking to get long it, I'm just going to say, well, you have a stronger stomach than me. I decided to go long it here, and I shared it, and then I messed up my own trade by trying to short it. You missed it. Visa, we talked about it. Opportunity coming, same as UPS. Break outside of the box, you're going to go to here. But banks are going to have a problem. Okay, so here's the second thesis. So I said maybe they trade with the banks. Maybe they trade against the banks. So if I consider them part of the bank basket, and my job as a money manager to manage $50 million trading banks, because that's what they do, and I can't buy the XLF, or I want to book profits from Goldman Sachs, I need to keep it in banks. Don't I throw it in something that doesn't have the same chart as the XLF, which would be these guys, the transactors. Anyway, so stick to the charts instead of speculating. I'm comfortable long if I'm long. The bulls are in charge and they have an opportunity above them. I would not short that opportunity. Valero, I would short everything oil. That's the honest truth. Most definitely not an entry point here. Okay, that's the easy way to say it. Verizon, I already shared a long and already played out. The long, if somebody bought stock, then they're enjoying 5% yield. If somebody sold a put, they're in the money in a good way, like they have profits. Put spreads as well, calls and call spreads. So just book your profits wherever you want. It's going to face resistance. So the bounce is not going to be to the moon, Alice. Something happened. So 50% retracement of the drop. From here to here, eyeball is about half of it. I usually book it. When it comes this fast, I book it. Okay. If I bought shares, that's different. Workhorse, avoid the whole sector. All these junk electric EV companies. I mean, what? Come on. It's just not an ideal situation. One order broke the company, right? Come on. So, yeah, it's a utility vehicle, but it's the niche market. Look how consistent they are selling the pops. There's no bottom. So maybe 6 is the bottom, maybe not. We'll see. If you believe in the company super long term and you're thinking it's going to go back to here, I think you're wrong. But it could happen that it does better, but it's not going here. Well, I shouldn't say that. We've got Reddit going on, but it shouldn't. Yeah, it's not for me, that's for sure. Walmart, boring. I wouldn't trade it with options because there's no premium to sell. I would buy them maybe, and it's doing this yellow line. So you want to avoid this yellow line. It bounced where we thought it would bounce-ish, perfect. So I can bank on it. So if it falls to here, I can buy calls, sell puts, or put spreads. But there's never any premium. When it was collapsing here, I think, on the earnings or something, I couldn't find any premium. I went that day. It was falling off a cliff. The market was red, and I couldn't find any premium to sell. So it's hard. So this is where you buy shares and sell calls against them, cover calls, or you buy calls into money and just treat it like a futures trade type of a deal with a tight stop. XLE, I would short all oil. That's personal preference. I haven't, but I wouldn't chase it. So I opted to stay out. The last pops in the USO I shorted, and luckily then I said to myself, I'm not interested. Breakout, okay to revisit. So I was shorting here and here. I don't think I shorted here, but then I stopped because this is a clear breakout with an upside potential, and they played it out. And now XLE, slightly different, but it's going into much older problems. So here's my take. The XLE, 44% of it is two stocks, Chevron and Exxon. Why on earth would I want to mess with the rest? So if I wanted to be long XLE, I would own Chevron or Exxon. Exxon pays 6%, I think, yield. So, and I would time my entry at lows, not at highs. So that's why I would avoid the XLE. So look at Exxon. If Exxon takes out 65, massive cup and handle, but it looks weird. So in this case, 76 to 80 is doable, but it looks so weird with all of this overhead supply. Like it would need, I don't know, war in Hormuz or something to actually bring that about. So I'm gonna do it like this. If this happens, it's just that would be an amazing feat. What is this yellow line? Okay, I'm gonna go to a monthly chart. Excuse the noise. I just want to see what that yellow line is. Okay. So I'm not a fan of these big trend lines, but look, it plays out pretty nicely. I drew it and I'm not a big fan. And I had a breakout here, and a similar breakout would be coming if that happens. That one. It's similar to this one I just moved over there. So that's the indirect way of trading the XLE. Yes, it's tradable. I wouldn't take it along. I wouldn't short it either right now. I would just buy the dip when it happens, if it happens. XPEV is an EV company, but it has income. It has income. So I'm willing to bet on it like NIO, like Tesla, and LI. So these are actual companies that have P&Ls. I wouldn't touch Lucid because the entire stock is made up of hope. There's no P&L right now. So how do you know what's going to happen, when it's going to happen? And this one trades well. Now going into these prior fails, I expect sellers. If they clear this, then I don't think this holds. So I would not be short. Maybe after another day like yesterday, I could chase it, but an 8% rally, you missed it. The buy the dip opportunity worked out. Maybe the next one. Or a trigger. Yes? Is there a ticker called yes? Huh. Yeah, I don't know what this is. Oh, $52 million market cap. So that's a micro cap. It looks like it has support right here and lower highs. So as long as the bulls can hold that support, they can start arguing with these lower highs, 85 cents, 90 cents. And if you take out 90 cents, then you have upside potential. I'm really not that good with the penny stocks because the charts are not always truthful. Like you lose this, you're going to come down to here really quickly. So you need to do some homework. Zoom, everybody hated it. I thought it was overdone, and I still think it is. It's super cheap. That doesn't mean it can't get cheaper. But if you force me to be long or short, I would be long for the long term with conviction. How can I do it? I can buy shares. I can buy leap calls or call spreads. Calls are expensive, so most likely call spreads. I would sell leap puts or put spreads. And just let time do the work for me. That's for Zoom. Zynga, first green week in 10. Okay. And we really? First green week in 10? Arguably. It's been on a losing streak. What is a leap put? A put that has a long time on it? Out next year? Zynga. Another chart I don't want to look at ever again. No. So I think it got beat up with the headlines from China gaming thing. Technically, it's at a pivot level, but it's crazy. So I do have longs. They go red, they grow green. I was like, come on, commit one way or another, people. I did sell covered calls against it a few times, so I'm not as upset with it, but I'm frustrated with how erratic it is. That's the nature of the beast. Because of the weekly chart, I could comfortably be long, and knowing that it is speculative trade. All right, last ticker of the day, Zscaler. Oh boy. So maybe they broke out, maybe they didn't. And if they did, well, look out. I know for a fact that I shared breakouts like these before that delivered super profits, and I haven't traded it since then. Maybe it was this one, but don't short it. Or maybe I think it was this one, but don't short it. This thing runs fast, and the fact that it's been at an all-time high, this is like UPST. Am I late? Maybe, but it's worth a shot that if somebody can trade fast. It's not for me, but it's doable for momentum traders. Boom! 150, whatever it is. A lot of tickers. So let me see here. Anyway, last minute ticker. Somebody had the last minute ticker. I'll give you one. 114. DRI. Okay, Bravo. All right, it's a buy the dip opportunity rather than sell it. So from here on down, you have support. So if you're not if you're long and you didn't get out yet, I personally would be willing to wait out a few more ticks to see what happens. There's support below, and this is Darden Restaurant. So how much exposure do they have to China? I don't know. So do your homework from that perspective to see that there's nothing in the closet. But technically from the chart, it has support. All right, folks, this is 115 charts with a good attendance. I appreciate it. 2 hours and change. And if you're watching at home, thanks for sticking with the video. Next week should be interesting. I will send out, I will send out a weekly strategy video later tonight. This way, I'll have a clear head. I'll take a break to make sure I come into it on a clear head. But the Bulls did some pretty good work last week. Maybe they can extend it this week too. Netflix will be a big pivot.